Whenever we see a divergence, this means that we're going through a process of moving apart or deviating from what we are seeing. In this case, it's the US market. Even though it may appear to be trending higher, but its activities and especially the transacted volume are telling us the otherwise. And what are the other implications? My name is Kon Hao. My work in this channel, as always, is to study behavior science in finance, discover correlations between different markets, and uncover potential opportunities. And before we get into the subject, please do take some time to read into the disclaimer. And what we're going to study here to represent the US market is the S&P index. And why I like to use S&P index, because it gave me the right balance if I'm going to measure the general health of the US stocks. And this is Dow Jones, and we all know that it represents a basket of 30 stocks, heavy weighted, and NASDAQ is a measurement of all the tech stocks of 100 of them, whereas Russell are 2,000 of the mid-cap stocks. So again, to measure the general health of the US stock market, I would prefer to use S&P. But in today's tutorial, it applies to all of them. And later on, I'm going to give you some data. Why is it so? And what we're seeing here is the divergence. It means that since the late of 2022 into 2023 into 2024, right now, the market has been going on a bull run, but we're seeing a divergence, which I'm going to explain to you in a short while. Let's recap back to what happened to after March 2020. And of course, this was the pandemic, and the Congress and the Fed came in with really good stimulus, and that caused the market to rally for more than 1 year, about coming to 2 years. And what I would classify this as the market rally. And let's look at the interest of this rally at a point in time. And what we're seeing here, that from this point onwards to all the way to here, and we have to agree that there was a consistency or a volume in constant while the bull is picking up. And I will classify this as a gradual bull. Now, let me just type this in. A gradual bull. I'll place this here. And of course, at the turn of 2022, at the beginning of 2022, we saw that the market start to drop to this point here, to coming to the end of 2022. And the reason was because at a point in time, the inflation or the CPI have risen from 1.67% all the way to about 6 to 7% at the beginning of January 2022. And that caused the market to come into bear. And what is observed here is that as the market lead us into a bear market back then, but what I saw that the volume is really interesting here is that from this point, which is January 2022 to the end point here, we could see a ascending volume. That's what I'm seeing here. Now we have to take note of is that whenever the bear market arrived with an increase in volume generally, and I would say that I would classify this as a strong bear. And this is what we have to take note here. And I believe that the strong bear is still lingering around, and I'm going to explain to you the reason why. I'm just going to shift this up here. So this represents a strong bear with a downtrend, but the volume seems to have picked up, means that the selling are tremendous. And of course, at the turn into 2023, the inflation kind of fall to current about 3.4%. It was a good news, and there's a hope of a cut in interest rate. And since then, at the end of 2022 into 2023, the whole year, and that lead us to 2024, the market has been going up. But I also want you to take note that as the market climbed into this uptrend, but we also saw that there was a decline in interest, decline in volume, and this bull does not support that there's a new interest coming in to support a bull. In general bull, this is what I call gradual bull. In a strong bull, as the market pick up, the volume have to pick up as well. The interest will have to pick up as well. And this is what I will classify as a weak bull. And so earlier I did say that we are starting into the S&P, but let's look at how about the rest of the contract where it represents the Russell, NASDAQ, S&P, and Dow Jones. We're starting into the micro E-mini, the E-mini, NASDAQ, Dow Jones, Russell, and S&P. Even the cash, it should give you the same reading as well. So what I'm trying to point out to you here is that in 2022, it was generally what we could see here as the market come down, the volume, the whole year volume pick up compared to the previous year. But with the rally of the crossover to 2023, which is here, we could see that this block here, the whole block here that include all these four indices compared to 2022 have dropped significantly. So it does represent that it's not just the reading on this divergence, volume divergence in the S&P, but it also represents the rest of the indices as well. Now let's look at the option market. And this is a measurement of the micro E-mini options in NASDAQ and S&P. So same thing here is that I want to take note here, we could see an incremental of interest, the volume pickup compared to the previous years in options. We could see that there's Q1, Q2, Q3, Q4 in 2023, and especially the last quarter of 2023, the volume pick up tremendously. Now, what does that imply when the volume pick up tremendously? Now, whenever there is an increase in volume in the indices options during a bull market like this also means that traders are using options to hedge into this bull market, and they are cautious about this. So what is my conclusion? My conclusion is this, that please note that the divergence that we're seeing here, that we are observing here, it does not indicate that the market is going to decline anytime soon. What this means is that the bullish trend that we're currently witnessing may be losing some momentum. Therefore, it is important not to become too complacent and assume that this bull will continue charging indefinitely. During times like this, it's always good to take calculated risk with our investment. Continue to buy on dips, but with cautiousness. If you would like to learn more about divergence, visit our resource titled Identify a Change in Market Trend on our website. There, you will find information on how to confirm a change in trend using divergence. Stay tuned for my coming tutorial. Remember to subscribe to my channel. The market are always telling us on their next move. Join us in our weekly case study and discussion. Click on my profile icon to find out more. Feel free to leave any comments below. I love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.